Welcome back to my channel. In this video, I'm going to cover AbbVie. This is a pharmaceutical company that's been operating really well for over a decade. They had a rough 2023 where they saw their revenue go down. But will they change things in 2024? Will they begin to grow? And this has been a really good company. This is a big cap stock with their company being worth over $290 billion. Over the past year, the stock's done okay, a 9.9% return on appreciation, and they pay a nice dividend of 3.79%. Historically, AbbVie's done much better than that. And it's really the decrease in revenues and the threat to one of their principal drugs, which is going off patent, that's created a lot of concern and fear around this stock. It might be a good time to buy as a value investor, but I got to be careful. Got to do my homework and study the most recent earnings report that they announced about a week ago. In this video, I'm going to look at the fundamentals of AbbVie. I'm going to take a look at a valuation I put together for the company, go through their earnings report, and see what I want to do with this stock. I currently own shares of AbbVie, and I have a hold on my investment of roughly $14,000. I'll make a decision at the end of this video whether I'm going to buy more shares, hold, or sell my shares in AbbVie. Before I proceed, let me just remind you that my videos are just to share my experience as an individual investor. It is not a recommendation that you buy or sell AbbVie, and I'm not providing any financial advice. Let's take a look at the fundamentals of AbbVie. The company has revenue of $54 billion. It is a big, big company. They, again, provide a nice dividend of 3.79, and that dividend is very safe. The payout ratio is in good condition. A lot of analysts cover this stock, and analysts believe the stock is discounted by about 11%. Overall, the stock hasn't been nosediving, let's say like a Pfizer, but historically, AbbVie has done really well. You can see how it marched up over the last 5 years and just went from sub $75 up to $175. So it was a really good performing company, and they just had a really bad year in 2023. Is it a good time to buy? Financials, the company was growing nicely for years. You could see that growth, especially in 2020 and 2022. You saw tremendous growth, but then in 2023, we saw revenue go down by 6.44. I think that's a source of a lot of the worries, especially around one of their principal drugs. I think it's their biggest drug. I'm going to take a closer look at that when I look at their Q1 earnings release. They have a good balance sheet. Debt is less than 3 times EBITDA. Very good. Cash flow. This is a cash generating company, and their cash from operations did dip in 2023. And I looked at the first quarter of 2024, and it is fairly flat. The CapEx for this company is not very high. Very good to see. And just a reminder, if you look at the most valuable companies on the stock market, they all produce very high free cash flow, which is why I value companies based on free cash flow. Taking a look at the forecast for this company, again, 11 analysts cover the stock and they think it's 11% discounted. The earnings per share expected in 2024 is $11.41, which is a big improvement from last year, which was way down at $2.72. It's expected to grow. The earnings per share over the next couple of years will grow at 9%, 10%, and then 8%. So nice growth over the next 3 years. The dividend. Dividend is a really nice dividend of 3.79, and the payout ratio is deceiving. You really got to look at the first quarter. When I do that, the payout ratio is fine. They have lots of cash on the balance sheet. And I'll show that in a minute. They also buy back shares to a certain extent, which that's very good. So overall, this is a dividend payer, and historically, it's been a high performer stock. Looking at the first quarter of 2024 financials released on April 26th, the company actually beat on earnings per share. It came in with a higher earnings per share than the market expected, and that was favorable. Revenues increased just 0.7%, less than 1% increase on revenues. But after having a year where revenues went down, I call that one a win. If they can just stabilize their business and begin to grow. One thing that is encouraging is they announced that they're acquiring a company. And one thing AbbVie has been very good at is acquiring companies and having that revenue come into their income statement and really increasing that top line, increasing revenues and cash flows. It's a very good company that acquires other businesses. So that looked really good. It raised its guidance for the full year of 2024. Very good. And I'll use the guidance they're providing on earnings per share when I value the company based on earnings per share. In general, I think the earnings were good, and it wasn't a earnings report that really changed the whole narrative. I think there's still concerns around one of their drugs going down substantially. And I believe we're going to see that right here. Humira is their big drug. It went down 35%. Now, what's good is that they're actually growing two of their drugs, Skyrizi and Rinvoq, and I'm probably pronouncing that wrong, but those two more than overcompensated for the drop in revenue in Humira. So it's good to see that some of their other drugs in the same category of drugs has been increasing. If Skyrizi and Rinvoq continue to grow, I think they're going to begin to grow again. And then they have that new acquisition. So we need a quarter or two to see if that's going to be the trend. But if they really start growing, I think AbbVie is going to return to those glory days of the stock price going up. I'm going to do a valuation on AbbVie, and I'm going to do the first valuation based on free cash flows, and then a second valuation based on earnings per share. First, with free cash flow, I'm going to use last year's free cash flow. It's a conservative way to just get started with my model. I'm not going to grow those cash flows. I'm just going to expect they're going to be flat in 2024. But in 25, 26, 27, I'm going to grow them by 4%. And in terminal value, all cash flows beyond year 4, I'm going to grow by 3%. So I get all these cash flows and I'm going to discount them by 9%. Now, quality balance sheet, good company. I would normally give it an 8% discount rate at this time. But since they have had a threat to one of their primary business lines, I'm going to go with 9% as a discount rate and get an intrinsic value, a net present value of all those cash flows amounting to $352 billion. They have $18 billion on the balance sheet, and they have $63.8 billion of debt. So when I add the cash, take away the debt, I get to an equity value of $306.7 billion. The market cap's $290 billion. So it provides a small discount of 6%. When we look at all the cash flows that the company is expected to produce, and we discount them by 9%. Earnings per share looks good. The company upgraded their earnings per share, and I'm going to use an 18 PE. I had previously put a 24, but since they are under some threat, I'm going down to 18 for now. They have a growth rate of approximately 9 to 10%, so I'm going to go with 7 of growth rate over their earnings per share to get a value per share of $214 per share based on the earnings per share projections that I'm seeing. That provides a nice discount of 31% if we look at earnings per share. I'm going to blend the two calculations and you get to 14% discount on AbbVie. This is a quality company. And if they didn't have that bad year, and if they didn't have the threat of one of their main businesses, I would be a buyer all day long at 14% discount. But I have to weigh that against the risk of this business right now. And I may hold or I may buy and nibble on shares, especially if I see a dip in the stock price. I will definitely be a buyer. But those are the things that I'm thinking about as I think about AbbVie. So should I buy, hold, or sell AbbVie? I'm going to base that decision on 3 criteria. First, am I still a believer in the company, in the business, in the management team? Second, do I still like their balance sheet? Is it a quality balance sheet? And third, do I like the discount? First, on the company. I really like the company. These guys have been successful for a long time. I like how they acquire businesses and they really make them work for the overall business. They've been very successful in acquiring businesses over the last 10 years that have been a net improvement to their overall business. Management team's really good. So overall, I like the company. I like the balance sheet. They have a fair amount of cash. They have very good EBITDA, and the debt ratio, debt to EBITDA, is less than 3. So I like the balance sheet. I like the discount, but I'm not fully convinced. I still see that this business is under threat, and a modest discount is not enough for me to jump in headfirst. I'd like to buy more shares if there's a pullback, but I'd like to see one more quarter of financials, seeing that their strategy is working before I invest bigger amounts of capital in AbbVie. I've invested $14,002 into AbbVie. In my investment, the current value is $13,848. So I've lost about 1% on the investment so far. I've been owning this stock for about 4 months, and this yield obviously is not positive, but it's been a short period of time. I'm going to track the stock and see how it performs over the next 3 months, especially on dips. I'm going to buy more, especially since it's a nice dividend paying stock, and I like having it in my income portfolio. Overall, AbbVie has been an excellent company for a long time, and that means something to me. I think they can return to that really good run rate in their revenue, in their profitability, and in their cash flow. We'll have to see, but I'd like to have a front row seat for this company and buy at the right time so I can be a long-term holder of this company if their strategy works. Or if their strategy fails, I need to really keep up with the news and information on AbbVie so I can exit this position before I lose too much money. Thank you for watching the video. I really appreciate it, and I hope you found it interesting.